Hello everyone, welcome to lecture number 50 of BHU Swayam course on Fundamentals of Economics and Financial Markets. Myself Dr. Anand Singh, and today in this particular video I will be discussing with all of you regarding OTCEI, that is over the counter exchange of India. Now in this particular video I will be discussing with all of you regarding these important key points. The key points are: point number one, when and how OTCEI was established. We will discuss regarding how such kind of stock market came into existence. In the second segment, we will discuss regarding the important promoters of over the counter exchange of India. In the third segment, I will be discussing with all of you regarding the objectives behind establishment of OTCEI. All of us knows that OTCEI was basically a different kind of stock exchange. So in the third segment, we will discuss regarding the point that on what conditions or what were the objectives in the minds of the government regarding the establishment of such kind of stock exchange. In the fourth segment, we will discuss regarding the trading mechanism of OTCEI. That means what kind of trading or what kind of mechanism was adopted by OTCEI in order to execute the trading, that is the sale and purchase of securities over the platform of OTCEI. In the fifth segment, I will discuss with all of you regarding the key benefits of OTCEI. In the sixth segment, I will be discussing with all of you regarding some of the problems or some of the threats which were concerned with OTCEI. And in the final segment of this particular video, I will be discussing with all of you that why OTCEI was de-recognized. That means what were the conditions, under what circumstances the over the counter exchange of India was de-recognized. All of us knows that nowadays OTCEI is not in existence. It is not continuing as a stock market. So we will discuss regarding what were the conditions, under what conditions that particular stock market was de-recognized. So let us start this video. In the first segment, I will be discussing with all of you regarding the establishment of OTCEI. The over the counter exchange of India was established in 1990 under the Companies Act of 1956 and began operating in 1992. So it is very clear that OTCEI was basically established prior to the establishment of NSE. We know that NSE was established in 1992, but OTCEI was established in 1990. Also, OTCEI, it started operating as a stock exchange in our country in 1992 itself. That means it started operating as a stock exchange prior to NSE, because NSE started operating as a stock exchange from 1994 onwards. So we can say that OTCEI was established and it also started functioning as a stock market prior to the National Stock Exchange. OTCEI was recognized as a stock exchange by the central government as per the provisions of Securities Contract Regulations Act 1956. All of us knows that in India, if any company has to work as a stock exchange, then it has to take permission from the central government, and the central government used to grant permission to any company who is willing to operate as a stock market when the company will fulfill the provisions which are stated under Securities Contract Regulations Act 1956. So OTCEI was also granted recognition as a stock exchange by the central government as per the provisions of Securities Contract Regulations Act 1956. Two important committees were basically established by the central government. The first committee was under the chairmanship of G.S. Patel. So it was popularly known as G.S. Patel Committee, and this committee was basically established by the government for the improvement in stock exchanges, so that this particular committee may give necessary recommendations to the government for making necessary improvements in the functionings of the stock exchanges. The second important committee was Abid Hussain Committee, and this committee was established by the government for the development of capital markets. Government basically asked this committee to give certain recommendations so that necessary changes may be done in the capital markets, so that improvement or development of capital markets may be done. So on the recommendation of both these committees, that means the Abid Hussain Committee and G.S. Patel Committee, on the recommendation of both these committees, OTCEI was basically established in our country, because both these committees strongly recommended to set up new stock exchanges based on computer networks. Now, prior to 1990, all the stock exchanges which were established in our country and all the stock markets which were operating in our country, they were not based on computers. So both these committees strongly recommended to establish such kind of stock market in our country which will work as per the computer terminals or with the help of computer terminals. So on the recommendations of both these committees, the Government of India established OTCEI in the year 1990. This exchange, that means OTCEI, is also known as India's NAST. All of us knows that there is a stock market in USA, that is NASDAQ, NASDAQ, and that NASDAQ is basically a kind of over-the-counter exchange of USA, and this OTCEI in our country, it was established on the basis of NASDAQ of USA. So in our country, it is popularly known as, that means OTCEI is popularly known as India's NAST, because it was developed on the basis of USA's NASDAQ. In the next segment, we will discuss regarding the important promoters of OTCEI. The OTCEI is based in Mumbai, India, and operates solely over a computer network. That means its entire operations were basically handled by computer networks only. It was under the ownership of Ministry of Finance, Government of India, and it was basically promoted by large number of financial institutions such as UTI, ICICI, IDBI, IFCI, and other institutions like GIC, SBI CAPS, etc. So we can say that large number of financial institutions, more or less they were basically belonging to the government sector. Most of the financial institutions who promoted or for the establishment of OTCEI, they were directly under the control of central government. But yes, there were certain private financial institutions also. So large number of financial institutions, they were the promoters of OTCEI. Now let us discuss regarding the major objectives behind the establishment of OTCEI, that on what terms and conditions or what were the basic objectives in the minds of the promoters. Some of the important objectives were, point number 1, to allow companies to list themselves for the first time through initial public offerings. Basically, after establishment of OTCEI, the promoters wants to give recognition or give basically an opportunity to large number of companies. Basically, focus was upon the small companies, so that the small companies may list their securities with the help of or by floating their IPOs. The second objective was settlement of the securities was done on the same day. all of us knows that the trading settlement cycle or the settlement cycle over the stock exchanges during the period of 1990, it was T plus 7 or T plus 5. So in order to reduce the trading settlement cycle, the OTCEI was established and its basic objective was to settle all the transactions on the same day. The third objective was to provide a cheaper and easier means of trade for the public and small companies. Cheaper basically indicates the commissions, the brokerage, which were basically charged by the brokers on the leading stock markets like Bombay Stock Exchange. It was at a very higher side. So the promoters decided to establish OTCEI, where such kind of brokerage, such kind of commissions will be cheaper and easier means of mechanism. That means OTCI will not let down strict rules and regulations or strict listing norms which are not easy for the smaller companies to be fulfilled. So both the objectives were there, to provide a cheaper and to provide a easier means of trade. The fourth important objective was to help maintain the liquidity of small companies' securities. That means the small companies may also maintain their liquidity position in the market. Such kind of mechanism was to be provided by OTCEI. And the last objective was stocks that were listed on other stock exchanges were not granted permission for listing over OTCEI. That means the promoters were very clear that they are going to recognize or they are going to establish such kind of stock market, that means OTCEI, where the already listed securities, that means those securities which were already listed over any other stock market, now they will not be granted permission to list their securities over OTCEI. So these were some of the basic objectives on the basis of which OTCEI was established in the year 1990. Some of the important features of OTCEI are: number one, stock restrictions. That means stocks that are listed on other exchanges will not listed on OTCEI, and stocks listed on the OTCEI will not be listed on other exchanges. So it was very clear that if any stock is listed over OTCEI, then permission will not be granted to such kind of companies to list its securities over any other stock market. And if any stock of any company is basically listed over any recognized stock exchange such as Bombay Stock Exchange, then its securities will not be permitted to list over OTCEI. Second important feature is minimum capital requirement. That means what was the minimum capital requirement for a company who is willing to list its securities over OTCEI? That was the requirement for the minimum issued equity capital is 30 lakh rupees, which is approx 40,000 US dollars. The third feature is large company restrictions. That means companies with issued equity capital of more than 25 crore rupees are not allowed to list their securities over the OTCEI platform. Next important feature is member base capital requirement. That means the members must maintain a base capital of 4 lakh rupees to continue to be listed on the platform of OTCEI. So there was a minimum base capital requirement for the members also. Now let us discuss regarding the major participants in OTCEI. Who were the major participants? Some of the important participants in OTCEI were: point number one, brokers. All of us knows that the brokers are the most important members of any stock market. Why? Because all of us knows that only the brokers, they are granted permission to place the orders on behalf of their investors. Only the brokers can place the buy and sell order at the trading platform of stock exchanges. In the same manner, on OTCI also, the brokers were the most important members. The second members were the market members. Now, in this particular market or in this type of market, that is OTCEI, the most important members were the market makers. Why? Because the market makers, they ensured that there were enough shares available for trading and that prices remained reasonable. So the market makers, they basically used to provide a buy and sell order, or they were basically responsible to execute any order. That means for every buy quotation, they used to provide a sell, and for every sell quotation, they used to provide a buy quotation. So the market makers were responsible for ensuring that enough shares are available for trading purpose. That means for final settlement. The third important participants were the sponsors. Sponsors were basically the official members of OTCEI, and only sponsors were allowed to bring the shares of companies in this market. That means if any company is willing to list its securities over OTCEI, then it was compulsory for the company to take the help of any sponsor. So sponsor was directly attached with OTCEI, and sponsor was responsible to bring a new company to this particular market. The next important participant is issuers. That means the companies. Those companies who are basically willing to list their securities over the platform of OTCEI. Also, OTCEI was not a central physical market, but a collection of brokers and market makers scattered throughout the country. So it was not just like the older type of stock exchanges. For example, Bombay Stock Exchange, which were having a physical place. We can see that Bombay Stock Exchange was located in Dalal Street of Bombay. So it was not that kind of stock market. In fact, OTCEI was basically a collection of brokers and market makers who were scattered throughout the country, and with the help of their computer networks, they used to execute the stock tradings. In the next segment, we will discuss regarding the trading mechanism at OTCEI. That means how the trades were executed, how the orders were placed at such type of stock exchanges. First one is registration with OTC for all the investors was compulsory. That means it was compulsory for all kind of investors to get themselves registered with OTCEI if they want to place their orders at the trading platform of OTCEI. So this was the first and the most important step. That means registration of the investors. In the second step, the investor registration was required to be done only once. That means once the registration for a specific investor was done, then the investor was not supposed to be get himself registered again and again. Once registration was done, then that investor was permitted to execute trade at any platform of OTCI. That means throughout the country, he was permitted, he was eligible to execute the trade. Next one is no registration fees was there. That means for the purpose of investor registration, no fees was taken by OTCEI. Next one is registration was done to facilitate the computerized trading mechanism. Since the trading was done with the help of computer terminals, so it was necessary or it was important to give a number to a specific investor in order to identify him, in order to basically safeguard the interest of that particular investor, and that's why that investor was basically granted a specific registration number. So registration was also done to facilitate the computerized trading mechanism so that OTCI may supervise the activities of that particular trader, or so that effective mechanism may be imparted by OTCI over that particular investor. Also, after registration, the investor was given an Invest OTC card. That means all the investors who were successfully registered with OTCEI platforms, they were basically granted Invest OTC card. So once a investor got Invest OTC card, that means now he is eligible to execute trade over the platform of OTCEI. Later on, after getting the Invest OTC card, the investor will collect CR, that means counter receipt from the official counters of OTCEI. Next, CR has three important segments. That means the counter receipt was basically such kind of receipt which was divided under three important segments. The first segment deals with investor. Here, under investor segment of counter receipt, the investor has to fulfill all of his details, the details which are concerned with the investor himself. In the second segment, that means the counter segment, the investor has to deal or basically place the order with the counter, and the counter operator was granted permission by investor to deal on behalf of him. So CR was, after fulfilling that particular counter receipt, the CR was forwarded to the settler. Deals automatically gets confirmed at best prices. Now let us discuss regarding some of the trading mechanisms regarding buying and selling. That means what happens during buying at the over the counter exchange of India platform, and what was the trading mechanism during selling quotes at OTCEI platform. In case of buying, the important steps were: point number 1, the check or the payments was to be made in the form of checks. That means it was compulsory for the investor to make the entire payment through checks. In the next step, the investor was supposed to get the CR, that is counter receipt. We have already discussed that all the three segments of counter receipt was to be fulfilled by the investor, and thereafter in the third step, the returned CR when check is cleared. Check is cleared, that itself means the trade has been executed. So when the check gets cleared, then the CR, that means the counter receipt, was to be returned, and in the final step, that means step number 4, that means the investor was supposed to collect final CR within 7 days. In the case of selling, the important steps were: point number 1, give CR, that means investor was supposed to give the counter receipt and transfer deed to the counter. In the second step, the investor was supposed to receive the sales confirmation slips, and in the last step, the investor was supposed to return when CR, that means counter receipt, and the transfer deed are cleared and collect check. So in this manner, the trades were used to be executed on the official platforms of OTCEI. In the next segment, we will discuss regarding the major benefits which were concerned with over-the-counter exchange of India. Now, benefits in this particular segment, we will discuss regarding the important benefits which were basically concerned with the investors. Some of the benefits were: point number 1, investors have access to current prices of all the scripts. This ensures transparency in trading. So the investors were highly benefited because they have access to the current prices. Point number 2 is quick settlement and definite liquidity was ensured. Third benefit is it was a pre-verified trade, and therefore there was no chance for bad deliveries. Now, in this particular segment, we can say that there was no chance for bad deliveries. In case of investors, it was basically a very, very positive sign. Point number 4 or benefit number 4 for the investor is market makers ensures liquidity. Also, they ensures price stability and depth of the market. The fifth important benefit is the transaction was possible from anywhere with the help of computer terminals. So the investors can place their orders, the orders related to buy or the orders related to sell at or from any portion of the country with the help of computer terminals. Final, almost no chances of manipulations in share prices was there. So these were some of the key benefits of OTCI for the investors. Now we will discuss regarding the key benefits for the companies by OTCEI. Some of the benefits are point number 1, small and medium sized companies who were not listed over other stock markets, they got a chance. So if a company was not listed over any other stock exchange, that type of companies were permitted to get themselves listed over this particular stock market. The second benefit was the cost of public issue is very, very low as compared to the other type of stock markets, say Bombay Stock Exchange. So cost of issue at the traditional stock markets were very high, whereas the cost of issue at OTCEI platforms were very, very low. The third benefit is company gets high visibility at national level. Once a company was listed over the platforms of OTCEI, then it was 100% sure that it was visible to large number of investors scattered throughout the country. The fourth benefit was deals at reasonable prices. We have already discussed that one of the objectives behind the establishment of OTCEI was to provide a reasonable price mechanism. So the prices which were charged by OTCEI platform, they were quite reasonable. Next, market makers ensures liquidity. This was one of the most important benefits which were basically benefited by the companies or which were basically enjoyed by the companies, that the markets makers were there and they used to ensure the liquidity position. And the final benefit is at OTCI, companies have to offer 10% of their share capital for listing as against 60% being the offer to the public in case of other stock exchanges. That means, for example, say if a company has to list its securities over Bombay Stock Exchange, then at least 60% of its total shares must have been listed over the Bombay Stock Exchange. Whereas in OTCEI, suppose if a company has 100 shares, then only 10% of its shares may be permitted for the purpose of listing over the OTCEI platforms. So an autonomy was granted to the companies. So these were key benefits which were enjoyed by the companies when they were going for the purpose of listing over the trading platforms of over-the-counter exchange of India. Now let us discuss regarding some of the important demerits of OTCEI. The important demerits are point number 1, low liquidity. Point number 2 is volatile stocks. Point number 3 is lack of transparency. Point number 4 is risk of fraudulent activities. Point number 5 is less media coverage. I think this was one of the most important demerits which was concerned with OTCI, that is lack of media coverage. That means stocks often receive less coverage from media, making it difficult for investors to find reliable information. For example, the stock markets like Bombay Stock Exchange, they were given good platforms, they were given good coverage through the medias. So large number of investors, they were in a position to know about the kind of activities which were going on such kind of stock markets. But since media coverage was not done for OTCEI, or it was not done at that level. That's why such kind of stock markets, they were basically not so much popular. Also, OTCI was incompetent to handle large volume of transactions, and brokers were showing less interest in OTCEI. So these were some of the important demerits of OTCEI. Now in the last segment, let us discuss why OTCEI was derecognized, because all of us knows that nowadays this OTCEI is not in existence. That means it is not operating as a stock market. So let us discuss why it was de-recognized. SEBI de-recognized OTCI in March 2015 when OTCI had made payment of all necessary dues to SEBI, including 10% of the listing fees and the annual regulatory fees. OTCI was de-recognized due to a number of reasons. Some of the important reasons are: point number one, low commission. Because low commission was given to the brokers, so the brokers were showing less interest in OTCEI as compared to other type of stock markets. Point number two was companies listed stocks. That means some companies listed stocks that were about to be delisted on OTCI. So because of such norms also, it was later on de-recognized. The third important point is participants not making enough gains. That means participant did not make enough gains while participating in such kind of platforms of OTCEI. So when participants were not gaining much from such kind of markets, so it was more or less popular stock market as compared to other type of stock exchanges. Also, companies having trouble attracting investors. Companies had trouble attracting investors to the exchange. Companies were finding it very difficult to attract large number of investors over the terminals of OTCEI. And finally, after derecognition, OTCI filed for liquidation in the year 2017 after claiming bankruptcy and insolvency. With this, a very thanks for watching this video.